Hello everyone, welcome to another market update. We're taking a look at Bitcoin and you can see we have the exact same levels as last time. We've got a range between the 26k level here and the 28.5k level here. These are the two key levels I'm watching right now. We have one data point here showing that the 28.5k is a strong resistance, an entire region of resistance over here. And if we zoom out, we can see the 28.5k was also the bottom of the range over here, where we consolidated early 2022 before a huge breakdown over here. So this was a big breakdown point of the market, making it a pretty significant structural level. So that's the upper end. We break this level. We go to test 30k, there'll be some long opportunities there. And then we've also got this 26k level over here, where if we break down, we've got a small short opportunity here leading into the 25k level. Neither upside or downside is looking that great, just because this range has gotten quite wide now. And if you look, the relative size of this range versus the relative size of the profit opportunity afterwards isn't fantastic. However, I do expect a lot of volatility once we do break out of this area, simply because the 100 moving average for the longest time has been just such a key level. I mean, we zoom back all the way to July 21st here. Big breakout here, retest, held as support, went back up. Here, big bounce, then our big breakdown. Then the next time we tested it, acted as a resistance, big rejection off. Claim, this was probably the only place where it didn't have a big volatile reaction, where we just deviated above it, then it held and we went back down. Then you can see it repeatedly acting as resistance over here. And then finally, this was the big breakout point where we broke above the 100-day moving average, started this uptrend, one retest, got back above, and now here we are again, testing it. Really, it's holding as support, and I'm curious to see what happens. An important thing to note is last week I spoke about two different types of trading. Mean reversion trading, where effectively every time the price bounces to a resistance, you bet that it's going to go back down, and every time it goes to a support, you bet that it's going to go back up. This is mean reversion, which just means returning to where the price was on average. So a moving average here shows the average price. It's going up, coming back to the average, going down, coming back to the average, and you make money betting that it never deviates too far from the average, the exact opposite of momentum trading, where we deviate from the average and therefore we bet that we're going to deviate further from the average. Now, this is a very successful strategy when it comes to trading crypto, especially in a bull market. So now I'm going to talk about specifically when to do which style of trading. In the last video, you guys said this is very interesting for you, these two different types of strategies, and you want to learn more about them. Okay, so take a look here. So this is a trade construction guide that I posted not too long ago in my Telegram. You can follow me there for a whole bunch of different tutorials where you can learn about this stuff. See, most people have no clue how to construct a trade setup, and all they do is come with an idea, TP, and SL. Let me show you. So most people think this is a trade setup. We've got support here at 26k. So let's set up a long position. There's the long. Here's our stop loss at the next resistance. Here's our profit target. Now, this isn't a terrible setup by any means, but this alone is not a trading setup. Now, I'll explain why. This is not going to give you consistent returns because it won't be very repeatable. And I'll explain exactly how to create a repeatable trading setup. So the first part of a trading setup is going to be identifying the right environment. So before we come to even identify where we enter, exit, or take our stop loss, we need to check out market conditions. So as my understanding of market structure in different environments has grown, I've actually narrowed it down for my trading systems to 6 different types of market conditions that I like to use. And easiest way to identify them is a combination of moving averages and market structure. So the first type of market condition is up volatile. If you take a look over here, we've got a perfect example of up volatile. Moving averages fanning out. We won't go uploads, down, then up again, down, then aggressively up again. These wide fanning moving averages in the upwards direction are representative of an up volatile structure. Now, if we take a look here, let's get rid of the 100 actually, we can see a much less volatile, but still upwards moving market. So progressive series of higher highs and higher lows shows us a very not volatile upwards market. So these are our first two conditions. This is an up market, and then here we have an up volatile market. So there's two things we're looking for when we're testing market conditions. Is it going up, down, or sideways? Is it volatile or not volatile? And we've got the same thing for all the different types of markets. We've got here very sideways, not very volatile. Then here we've got sideways, but a lot more volatile. It doesn't matter exactly how you select your market conditions as long as you are consistent with them. If you're consistent with them, your data is going to be significant and that's going to give you good results. So yeah, one of the best things to do is look at market structure, and also moving averages can be very useful for that. Then two other things that can be very helpful is get a good idea of what's going on with market sentiment. For me, I love to use Twitter. I've been using it for 7 years, and based on how people just respond to certain tweets I have, based on how they respond to other people's tweets, based on the general sentiment of certain players, I can get a good idea of what the market is doing. This is very discretionary and it's not a core part of my system, but a good complementary part. Then we've also got market news. Now, news events, I actually don't think they're very useful for identifying up, down, or sideways. They're only useful for identifying volatile and not volatile. So if the market is currently going upwards and it's not very volatile, and for example, we've got a big upgrade coming out on Ethereum with a lot of hype around it, we can assume that there'll be a lot of volatility around that event. So now we move on to the logic, the underlying hypothesis behind our system. So let's assume our setup trades in ranging, not volatile environments, exactly like we have right now. It needs to buy support, but only when it's been tested less than 4 times. We had one test here, one test here, and here's the 4th test coming right up. So if price continues down here, our hypothesis is met and we can enter this position. Now the 3rd step is what most people do as their first and only step. That is identifying our entry, our profit target, and our stop loss. And there's also one more important element, which is going to be position sizing. You don't enter with a random position size. You take a look at the stop loss, which is at 4%, and then you make sure if that stop loss gets hit, you do not take a larger loss than your risk management allows, which for most people is 1 to 2% of their portfolio, 3% if you're very high risk. And the thing is, it's still not over. You still have not created a complete trading system here. You also need to identify how you're going to manage and execute your trade. You stick to your plan, and then there's a whole bunch of different strategies you can use to manage positions. You can add to your positions, you can cut them early, you can move your stop losses, you can extend your profit targets, you can cut your position size, leave some of it in. There's a whole bunch of different stuff you can do, and the only way to figure out how to do this is with lots of practice, lots of data in your trading journal. And there you have how to do a trading setup. See, Bitcoin right now is going sideways. There's nothing major to update after my Friday update, so I thought I'd give you guys a really useful trading lesson. If you want to learn more stuff like this, you can sign up to my Telegram for free. I post education there all the time. Then if you want something a little bit extra, I've also got my Zero Complexity Trading course, which you can check out. There'll be a link to that in the description below. If anything updates in the markets, I'll let you guys know on Twitter, and I'll see you here Friday for another market update.